What does it really take to scale an agency in today's market?
I really think for an agency, it is 100% doable to be at 30% like operating profit.
It's not just about growth hacks or groundbreaking creative. It's all about understanding your numbers down to the last decimal point.
The benchmarks I usually like to aim for, even just like on the whole spectrum, is like around 40% on the delivery.
This week, I'm joined by Joey, founder of Agent CFO.
We just take off all the financial responsibilities almost, and like the headaches and the stress.
Now, these guys have helped dozens of high-growth service businesses go from messy spreadsheets to well-organized financial machines.
They don't want to spend a lot of money in spreadsheets. They don't want to keep track of all the numbers, but they do want to understand the numbers. They want to learn more about their own business.
And today, he's pulling back the curtain as we dive deep into the 3 agency archetypes that he works with.
We just really want to understand, like, okay, what are the goals of the client and what are they doing now?
And how their goals change the entire financial strategy.
You need to have, good bookkeeping and a good model to capture all of these transactions.
The real reason one-time offers are crushing it right now.
You don't build a business of one-time offers unless you can really crack.
And why most agencies are leaving money on the table with blind forecasting and no financial model.
Almost a bit more of a hopeful approach in some ways, where I like to forecast more in the way of hey, what do you want to achieve?
Hey guys, if you're enjoying the videos, why not consider subscribing? We drop bi-weekly content that will help you improve your business right here on the channel. Joey, thank you so much for joining me in the studio today.
It's my pleasure. Good to be here.
So we were just talking off camera. You are back in Dubai now and you're ready to kind of lock in and grow the business, right?
Exactly, yeah. So I did a whole year of travel. Now came here again, got a place, and ready to just kind of put our heads down and just keep growing the business.
Okay. And this reminds me of something. And is it a prerequisite or kind of before or when you start work with someone? Do you work to kind of align on what the goal of their business is and what they want to achieve out of it, whether it's kind of a lifestyle business or, maximize revenue, profit, etc.? Is that step one?
Yeah, 100%. Because we only work with agency, of course, and that could be, every agency could be the same, but what the founder wants out of their agency is always very different. So the 3 areas that we, mostly optimize for, and one, those who want a lifestyle agency and they just want high profits, low stress. We have another group of clients who really just wants to grow very fast and just trying to expand and just grow as fast as possible. And the third group, they just want to go for an exit.
Mm-hmm.
They already have this in mind. It's hey, I just want to run an agency for a couple of years and then sell it and move on with my life. And so while just on a spreadsheet, these agencies might look very similar, what you optimize for is completely different. Because if you want to run a lifestyle business, you should not be dumping all your money into ad spend or into growth. Or you shouldn't overpay your team essentially. You might need very different team members. So it's always first thing, figuring out what do you actually want to get out of the agency. And then we can see okay, how should we set up the finances and the strategy and just the approach to even looking at the numbers to achieve that.
Okay. So kind of the metrics that you'll track and what you're trying to maximize is different based on the goals of the founder.
Very much so.
Okay.
Yeah.
Before we get into that then and talk about kind of KPIs and stuff, can you just talk to your kind of backstory and what you guys at Agent CFO actually do?
Yeah, of course. So we run a accounting and CFO service where we work just with agencies. So how I like to kind of frame this is that we just take off all the financial responsibilities almost and the headaches and the stress. We kind of try and keep everything to us so that our clients are just enabled with the right data, presented in a timely way and in a format that's actually useful for them so that they can focus on their priorities, whether that's again lifestyle, growth or an exit. So that includes bookkeeping, controller services, but also more the CFO side on the strategy, funding, anything kind of that's needed there. We just try and help them with that so that they are enabled to focus on what matters.
Okay. And how did you end up in that kind of spot working with agencies?
Yeah, so that again could be a long story, but I'll try and keep it nice and short. I actually just started by posting online, posting about finance and like the importance of it and what like my background was, what I can help people with. And actually, the first people who reached out to me were agency owners. And so at the time, it wasn't even my intention to go fully niche down on agencies. But that was just like what clearly resonated. And when I started working with people in this space, they were very much focused on they wanted to grow. They don't want to spend a lot of money in spreadsheets. They don't want to keep track of all the numbers, but they do want to understand the numbers. They want to learn more about their own business, and they actually want this help. And so just started posting more, kept working with these agencies, and then just realized hey, I pretty much run an agency. I resonate with these people. There's a need for this service. So why not just commit to this space? And now 2 years later, here we are, called Agent CFO. So it's in the name. That's just all we do focus on.
Okay, and product market fit kind of found you then, right?
I like to think so. Yeah, definitely definitely somewhat forced into existence as as everything is, but it seems to work so far. So.
Okay, but your background was, I believe you started in agriculture, right, or helping?
Yeah, okay. Exactly. So
can you just run through your kind of backstory?
Yeah. So if we take it even back before this, that's me growing up in the Netherlands. My family they're in agriculture, like tulip growers in the Netherlands, and so started there, grew up in that space, but then moved into finance, moved to London, worked in banking, and then the first kind of real entrepreneurial thing I did besides my corporate career was helping my family's business with kind of some issues they had with their bank. And so that's where I realized hey, businesses need help with the finances, but they don't need somebody there full time. They don't need to spend 100K, 200K a year for just someone on the finance side. They just need somebody there to really help them. So I was hey, helped, an agriculture company. Why don't I just focus on that? So that was kind of originally the plan of really going hard, being the agriculture CFO, really I went to these trade shows, met up with farmers all the way through London and through the UK, but just it was just not that product market fit like we talked about. Yeah. So I just found there's just something didn't click. I wasn't living their life. I didn't understand their issues. And so while I was trying that, that's when I also started working with these agencies, and things just clicked on that side, and I just realized a pivot was needed to actually, be in a space where I'm more comfortable, it resonates more, and it's just a better fit. So it's kind of a very organic shift to the agency space, but it was still very interesting to try and make this work for agriculture.
And I guess you are kind of running an agency, so you kind of work with people that are just like you, right?
Exactly. From a numbers standpoint, my business is the exact same as our clients. I have CFOs on the team, I have analysts on the team. We sell our time to our clients. We're thinking about offers, we're thinking about value creation, we're thinking about running ads. It's all the same dynamics. And so when I was speaking with farmers, I had no real feel for it's raining outside and they're stressed because their crop is being destroyed. Whereas I'm just I don't feel that pain. But when I speak with our clients and they're just I just need to be charging more, I'm I feel that pain. So it's just much more natural and it's a much more useful conversation when you can actually speak to the clients from experience. So.
Okay, I want to kind of now dig into what it looks like working with you. You mentioned kind of the initial step being finding out and aligning on the North Star of the business. What does the rest of the onboarding process look like, and what do you typically do for clients?
Yeah, great question. So we always start with that deeper review. So from an onboarding standpoint, that's typically the first week. We just really want to understand okay, what are the goals of the client and what are they doing now? So this already looks different for every agency, because some agencies come to us with a pretty good financial setup and they just might need a little bit of tweaks and maybe some advice. Other clients come to us where they just just had a bank account and that's all they looked at. Maybe a spreadsheet where they kind of kept track of like who their clients were, maybe what their costs were, often like not very accurate, not very up to date. And so then like it's really our goal to like go through everything, see what is being done, how much are we paying the team, how much are client paying us, are they paying on time, what is the churn, like really going in all the metrics and like to really understand what they're doing, try and like pick out any of the low-hanging fruit, and just kind of come to a plan of like, hey, if you want to get to a certain point, which might be the revenue goal, profit goal, exit goal, then we can already say like, hey, these are kind of like the top 5 priorities, for instance, that will have the biggest impact from that number side. That's really the starting point. Then from there, we do always set up our kind of custom model for the agencies because we just found like that's works very well. Like that's kind of our bread and butter in the financial models. So they actually just have a place. They can see what's going on. They can track the metrics. They can do their planning. And they just instantly shift from being blind in a way to really knowing everything about their agency. So that's really like the first kind of like first month pretty much to really get that refined and just like go from a position of just like kind of winging it and shooting from the hip to like having a full setup already. And then it becomes more like, okay, well, now we have data. What are we actually going to do with it? Because like there's no point in just reporting numbers. You know, maybe they already get like a P&L from their accountant every month. That doesn't really do much. It's then like, okay, how do we now actually implement it, and whether that's like accountability or advice or just, you know, maybe setting different strategies or targets. But that's really like the starting point to just get them the visibility and get them to know what to focus on.
Okay. Is the financial model the kind of backbone behind what you do, or the main skeleton?
Yes, very much so. So how I kind of look at the agency space is that, you know, the business model is quite simple of an agency. You know, you have clients, you have people, and you have operations. And kind of like that all causes money to come in from the clients and then go out to the team and your software costs, like all the other costs. That's all like captured in your bank account. You can see transactions, you know, coming in, going out. All of that is very, very interesting to actually track and see and like know, is this working well? But from your bank account, you can't really see anything. And so that's why it's like you need to have, you know, good bookkeeping and a good model to capture all of these transactions, all of these movements, and all of the KPIs, which I'm sure we're going to dig into, you know, all presented in just one place, which is that model. And then from there, it kind of flows out again into more strategic areas and actually know like, well, okay, what do we now do with this information? But I really see that model as the place to just bring everything together so you actually have one place to look at your performance.
Is that forward looking as well, or is it just kind of backward looking, that model?
Yes, more forwards looking.
Okay.
So
what kind of key stuff are you tracking in that model then, if we start to dive into the metrics?
Yeah, so this at the starting point, we just have like a tab for the clients, the people, and the expenses. This is where we track both just like the historic stuff of like how much did each client pay over time, but also where we just immediately forecast for every individual client and every individual team member and every expense, like what are the expected payments at least for them. That's really that starting point, and which already provides a lot of clarity usually, where just at least you know like which expenses are coming up, even if it's like weeks down the line. You kind of want to know it and just see how that will impact your cash flow.
Is that from the sense of, you know, if we're projecting, you know, 10% growth, we're going to need another pod, which means, you know, we need this amount of staff cost and we need to start hiring now? Is that kind of what you mean by that?
Yes. So that's indeed where it goes to. I would only say the nuance there is that I don't love to forecast in a way of like 10% growth, because while, you know, especially a lot of the finance people, while they gravitate towards that, and I know your background's in finance as well, so that's like especially
plug in a number, right? Average the
exactly, yeah, like forward, average growth rate, and then you just project it forward. And that's personally how I started as well. That's what my models were like, and that's really how I thought about growth. But now, just having worked with so many agencies and from our own experience, I just realized like that is just Like that is just wishing for growth to happen. And so I just take a much more like, a more, almost a bit more of a hopeful approach in some ways, where like I like to focus more in the way of like, hey, what do you want to achieve? And so it's like maybe, because like we had clients who double in 1 month. We had clients who added 100K in 1 month. So it's like a lot is possible, but like, you'll need to actually be fully set up for that. So like if your ads are working, for instance, like, and you have a lot of cash, you could just reinvest a lot more and really grow aggressively. But like that would mean then like you also have to hire very aggressively, and you have to make sure that, if churn happens, whatever, you keep enough of a cash buffer. So I'm almost much like, well, like let's first just see what you want to get out of the agency, and then we work backwards from there all the way to like the number of leads that are required. And then we can actually see like, hey, is this even realistic, or like would you need to hire another salesperson, or how many salespeople would you need to actually take on this many calls? So that's almost more my approach to forecasting. It is a little bit more nuanced than that, because of course like you don't want to just be like always like wishy-washy and just being like, oh yeah, I'm gonna double next month. Like you have to be realistic, but I think that's a much more productive conversation to have, of just like, well, what would that even look like? Yeah. And then like as part of our service, like every week we kind of check in on this progress, and then it can be like, hey, we're aiming for 200K this month. Right now we're 2 weeks in and we've only collected 50, and I can see we only have, let's say, 50K in invoices open. Like we're not gonna like sign 100K. Like we gotta be realistic. But that might mean like, hey, we also, as part of this 200K plan, we were also expecting to bring on 2 new account managers and maybe 1 new media buyer. But like since, the revenue goal is not gonna be realistic, like let's hold off on 1 account manager because we're just not there yet. And so that's more the conversation I like to have with our clients, where it's like, okay, let's just see what we want to get, then let's work backwards on how we can get this, and then we just either stick to the plan or we adapt if things are going either faster or slower.
Yeah. Okay. Yeah. Thinking through that kind of revenue growth, and let's just take a number here of, let's say we want to add on 50K net new revenue. How do you back into that? Is it the sense of, are you going as granular as that means we need, X many leads, and therefore, it's these 2 channels, it's Facebook ads and cold email, and we need to spend, 5K a month on Facebook ads? Is that the level of detail you'll kind of go to?
Yes. Okay. However, I will say that again, like, especially if you watch like, the Hormozy videos and everything, like that is what you then indeed think you should be doing. In reality, I do know it, it looks very different for all of our clients. Like some of our clients, they just don't have a predictable channel. Like they might just rely on referrals still. We are not the ones who can just work the magic and just be like, oh yeah, just, get 10 referrals, per week, and then you'll be fine. So it really depends on how they're set up. And then we just kind of work out what their funnel looks like. And now the benefit is that we work with so many agencies is that we can now advise them at least like, hey, we have the budget to start running ads. And then we can indeed go deeper on it and like actually track it to that level of granularity. But for some clients, it's more just like, they want to keep it simple. Yeah. And like they don't want, that level of detail. They just want to see like, okay, I just want to sign 5 clients this month. That's the only thing. Like I don't need all this extra data. So it depends a little bit on the goals and on the funnel. But ultimately, yeah, like the further and the more detailed you can go, the more useful the data is going to be.
Okay. And in your, like, obviously you're seeing like a lot of different agencies. In your experience, what are the ones that are scaling quickly? What are the kind of key reasons for that?
So I've been thinking a lot about this question because, of course, that's the most interesting. Like everyone wants to grow. One thing I kind of noticed across our clients is that the most profitable and the most optimal channel often for them is the channel that is closest related to the service they provide.
Interesting.
So our paid ads clients, we have a couple who really cracked ads, and that is by far their best channel. we have a ghostwriting or like content client, all their clients coming from their own content and their own personal branding. Like some creative clients, if they like when they make really good creatives and like bring people in through that. Now, of course, it's not possible for every niche, but like that's kind of the first thing I always now like to think about. I was just like, well, hey, like what do clients actually expect from you? Could that be like, are you using that channel already to drive growth? But other than that, it's like we've seen everything work, and like that's like, you know, maybe not the most useful answer, but like we have some clients who sign like ridiculous amount just through inbound and connections, but like that client, he is like meeting people twice a day. Like he is constantly out and about, and like he's signing, like he's one of our fastest growing clients, spends nothing on ads, on any direct costs. Of course, he spends like going out, meeting people, like travel costs, but he's growing very fast because he's just committed to that, and that suits his style. We have other clients who are growing very fast through Upwork, like a channel you would not expect for like a 7-figure agency, but like he's just cracked that, and it works for him. Others through ads, others through cold email. So it all can work. Of course, you have to play into your strengths, but yeah, there's a lot of different ways to grow fast.
Have you also seen that people seem to crack one channel and stick to that one channel and go super deep and become an expert in it, or add on, you know, multiple different channels and kind of split the risk, as it were?
And then we're talking about their sales channels, or for their own delivery?
For lead gen, yeah.
It does seem across our clients that the ones who are going really deep on only one channel find better results. But it also, then, you know, you can argue that like because they are doing some other stuff on the side, it augments it. So like our paid ads clients, they are posting content as well. And so it's like, well, the content's not driving the leads, but I can't say for certain that, you know, their ads would work as well if they didn't have content. But especially at the level that we're at, which is like high 6 figures to 7-figure agencies, it does seem to be more like, you know, need one channel that's really driving the most consistent lead flow. Mostly because like they just often don't have the resources to make multiple channels work.
And then they do, instead of one at 100%, like three at, you know, 30%.
Exactly.
Efficiency, and it just doesn't work.
Yeah, this is something that I also notice myself on a regular basis, where it's like, you know, I'm quite spread thin with like, you know, trying to make X work, you know, posting on LinkedIn, doing YouTube, the newsletter. But like, you can't, even like just for content, you can repurpose, you can kind of like spread it out, but still, you really notice like once you go really like, you know, just be present in one channel, that's when things seem to really start to work, and like that's when you build a community, that's when you get traction. Whereas if you just try and like be spread thin, nothing really takes off in the same way, I found.
Okay. And then I guess my next question is on the lead gen side, how important is the offer from what you've seen across these agencies?
Very important, I'd say. Yeah, especially the ones who are running ads, that's why you can see it most clearly, where, you know, like we're quite involved with 2 of the clients in their ads, where we actually really track like provide them much more detailed like performance metrics on it. And it's very interesting because they test a lot, and oftentimes they like make little tweaks to the offer, like, you know, maybe in more of an AI angle all of a sudden, or more like very much a done for you, or like a one-time offer framing. And in the metrics, you can like, it just like either spikes or completely tanks depending on how their offer is framed. So yes, like nailing the right words and the right structure plays a very large role.
Okay. And then in terms of an offer, what do you see in the market that you think, you know, for any service, for any agency service that you look at and you're like, wow, that's a really good offer?
I personally quite like the one-time offers that we're seeing a lot more of, just because it does feel like the space, I wouldn't say is becoming a lot more saturated, but a lot of more people have kind of been burned by agencies, and people seem to be less, you know, open to commit. Now this might just be a time thing, because like we are just in a pretty tricky time economically, and like there's just a lot of uncertainty, and like, you know, a lot of people are just spending less money, or they're at least less like willing to just part with their money. So playing into that, like some of our clients who do more these like intro offers and like these one-time things where they can actually really provide like a clear ROI, they seem to be signing like a lot more clients, and like they have a lot better sales performance. Now it still has to be kind of be taken into consideration, is that like, well, like you don't build a business of one-time offers unless you can really crack the sales side. So that's like, you do need to make sure you actually retain a large enough portion of your one-time offers and you actually have something really successful on the back end. But again, it's just more playing into like which type of company you're selling to, and you know, if they are more like enterprise, or they're not spending their own money, then again, like, you know, you might just be better off having an actual service they are more accustomed to buying, because like an enterprise might not really go for like a one-time offer, especially if you have like a whole, you know, you have to like speak with 5 different people in the company to actually get it done. So you do have to kind of consider the market you're in, but it seems like the one-time offers are doing quite well.
Okay, interesting. I want to talk now about the kind of metrics and what you guys focus on in that dashboard or in that model. What to you are kind of maybe top 3 or top 5, kind of metrics that you guys focus on?
Yeah, so while again this might sound a little bit boring, the most important ones I just like to really start with and clear up are just really the basic ones. Your gross profit, your operating profit, net profit, which can often be very similar. And like that's kind of like the first part of the dashboard, to really just show like, you know, your P&L laid out in a way that's understandable. Like your gross profit is all about like how profitable your service are, so how much you're spending on the delivery of the service. And so it's just a number that most agencies don't really know. Like they might know kind of how much they're paying their team, but just tracking that over time and seeing like the last year or just like how that's been trending is very valuable. Same for your operating costs. Like people just often like, you have a lot of one-time costs, like things like maybe you're investing heavily in a period, but a lot of them can't really say for certain what their real margins are. So that is something where it's like, okay, it's boring, but like that is really the starting point. You need to know if you're actually profitable. And then we like to go a little bit deeper. So like you ideally even start to see this at like a pod level or even a client level, kind of depending on how the structure is serviced. So again, still taking that profit, but just at a much more detailed level per client. And then if you want to go a lot more into it, then you start more looking at like, okay, what's the lifetime value, the lifetime gross profit, the CAC. Those are the most important ones, in my opinion. Even looking a little bit more on the health side, like your the cash burn rate, so how much cash you kind of have in a way. So there you can go quite detailed, but I'd say just really like actually understanding profitability and like actually understanding the metrics behind the drivers of this, which is mostly your client acquisition cost. That is really something that should be front and center.
Okay, so you kind of have the lagging metrics, which are on the front end, which are, you know, gross profit and revenue growth and that kind of side of things. But then you've got on the back end, it's, you know, churn. And I guess you can go even further than that, right? You know, client satisfaction rates and all that kind of stuff. Yeah.
So indeed, like definitely like maybe like the better way almost to present is like how I see finance is like that finance is this very unique position where it's almost a bird's eye view over the entire agency. Like there's not a single person besides the founder usually that actually knows or kind of should know like the performance of every individual part of the agency. And so when it comes to like the role of finance there, it's like, in my opinion, it's like it should track every individual part. So on the client side, that's really lifetime value, churn, and then like what are the reasons for churn, like how does it depend over time, per client, per pod, anything there. But also like on the team side, what is the capacity, what is the revenue per employee, what is the utilization, maybe employee turnover even needs to be tracked. Like everything kind of should be tracked, or they should be, you know, considered by the finance team. Then also operations, margins, budgets, sales side, cost per lead, close rates, like acquisition costs. Everything needs to be watched, but not everything needs to be front and center at all times. Because like, some agencies have a churn issue. So for them, like, there's no point talking about like, hey, your CAC has risen from like 500 to 600, where it's like they're losing all of their clients like on the back end. So it's like, while we should still keep an eye on it, that like not all of a sudden the CAC doubles without us really knowing, like we should not like worry too much about it because we have a bigger issue on churn. And so that's where it's like every dashboard is kind of unique. It's not like we don't have like a software. We actually just have like a custom model for every agency based on what they need. But it's neat. Like it's, you don't want to be seeing every number at every moment in time, as long as you know like, hey, we are watching it. Just like, okay, like let's just stay focused on what matters.
Okay. So step one is kind of seeing a snapshot of that model and seeing where you're at. Is step two then kind of comparing those KPIs or metrics to benchmarks and saying, or spotting problems and saying this is what we need to focus on?
Yes, I would say that's a big part. And so that's also something we recently started doing, is more like benchmarking our clients now that we have like a bigger pool of clients. So I do really think benchmarks are important. However, the big risk with benchmarks is that they can, one, be very deceptive because you never know exactly how, the other companies calculated certain things. Like, did they include owner's pay? Are they including fees in there? Like, it's a bit tricky to like see exactly how others do. And also, again, the goals. For one agency, like we have some clients who like don't want to go below 40 or 50% profit even, whereas others, like, they would never get there. But like then you can think like, hey, that 50% margin agency is 10 times better than, an agency at like 15% like margins. However, if you look at the hourly rate, probably like the agencies with lower margins can be like nicer agencies to run. And so that's why it's like, benchmarks are deceptive, but they are a very good place to start, to at least kind of like raise the questions of what is even possible in the space.
Okay, and I guess it allows you to give kind of a rough overview of what's going on, right?
Yeah, exactly.
Okay. And then I guess the next step after that is providing that insight, right? And this is where you kind of mentioned you're adding more value.
Yeah.
What does that look like, and typically what are you focused on in terms of the action items that you provide to agencies?
Yes. So again, that starts almost in the first week even, where we really just look like, hey, what is the outcome we're trying to go for? And then how are we currently performing? And then it's like, okay, well, if nothing changes, like let's say we do grow at a consistent rate, we do keep churn at the same rate, like are we just gonna get to that outcome, or does something really need to change? And so that's the starting point. And then, from a number side, it is very easy to work out of just like, hey, we just need to bring churn down from 15% to 10%. We just need to raise prices from 2K to 3K. Like, those are easy like things to mention, much harder to do. But at least that's when you can then have a discussion of like, hey, we just seem to be undercharging. Is it going to be realistic to charge 3K? If they say like, what, we should, then it's like, cool. From now on, that's the focus point. Or is it like, hey, we've just overhired a lot. Like, are we going to grow into this? Or do we just have to maybe, reassess kind of like the team size? Like, did we just get a little bit too ambitious here? And so it's like, again, it just depends on what they want to get out of their agency. But if you have the data, you can at least know which areas you need to focus on.
I know there are a couple of maybe focus areas that you see that are very common across your clients.
Sales is a very common one.
In what sense? Like not doing enough lead gen? Or?
Yes. So despite the agency space being, of course, all about revenue generation and like growth, it is still very common for agencies to struggle with indeed their own growth. Most of them, for the agency owners who are like indeed really like focus on their business, they want to like really focus on their clients, they really want to like deliver a great service, they're often not the ones that are aggressive enough in their own sales, and then they can really struggle with that. So just indeed presenting them with the numbers of just like, hey, look, we growth is not going to come magically. Like, these are our targets we should be aiming for. This is what other agencies are doing. We should be spending more on growth. Like, a lot of agencies are hardly spending anything, or like they're not reinvesting nearly as much as they can or should in sales. So that's often a big area. Another area can be around the team. This is not necessarily the full area that we get too involved in, because it's more like on the operations side. But we can see it's like, hey, a lot of agencies can have a tendency to maybe overhire a bit. They have the team is not utilized well enough. And so it's always like, these are always tricky conversations, because it's not, as black and white as like ad spend, where just like, well, it's profitable or not. Like, of course, you're now talking about people, their livelihoods. Yeah. So it's not just like, hey, just like fire 3 people and you're good, or just like how just cut their salaries. Like, it doesn't work. It's not as easy. But there is a lot of often more in terms of efficiency that can be gained. Like, one very interesting example we had the other day with a client is that his team was just kind of a much like a more of a flat organization style. So just like a client came in, and it would just allocate an account manager who had time, and a media buyer who had time, and kind of more a support person who had time. Worked well enough, but like the feedback of the team was like, it was just a kind of like a nightmare for them, because now they needed to they had every media buyer needed to have 3 calls a week with the different account managers they worked on to update them. There was so many conversations to be had, and so there it's it's not necessarily the finance team who should restructure that, but it's well, we just help them see hey, what if we just indeed group everyone together? We kind of help them match the clients, and that's what we implemented. And now it's not all of a sudden capacity doubled, but at least it's these are the little tweaks that you can make to just make sure your team can handle more clients, which then increases your capacity as an agency. And that, again, falls back on finance, where we're looking at, these numbers, and it's hey, we should be handling more clients based on the team we have. And then it's okay, that's an area we need to find opportunity.
Okay. Is there a number you could give us, which is, in terms of sales and marketing and growth, a percentage of revenue that agencies should be spending on that?
Yes. So the benchmarks I usually like to aim for, even just on the whole spectrum, is around 40% on the delivery side. Yeah. That is, some are even at 80%, some are at 60%. In terms of gross profits.
Okay.
80, that would be a very unprofitable agency. Yeah. But again, I think you need 40% is a very healthy number. Then around sales and marketing, anywhere between 5 and 15% is what we see amongst our clients. And then the 15% are more the ones that actually have a sales team already. So they have a close, or they might have an appointment set up, and they are running ads. That's when it can go more to the 15% side. General cost, softwares, fees, maybe some admin stuff, also kind of the 10-15%, and then maybe 5% on kind of other costs maybe needed, travel or any of these other areas. So that leaves you then with roughly 30-ish% in profit, maybe a little bit lower if you have the founder's salary in there. Yeah. But I really think for an agency, it is 100% doable to be at 30% operating profit. So I think that's always what I like to use as a starting point, and then again adjust based on the founder's goals.
And that is at scale, right? That's not a kind of beginner freelancer. This is 7-figure agency you're talking about.
Exactly, yeah. Okay. It's still, we have clients doing over 200K a month, even still at 50% operating margin. But that's more performance-based deals, very high retainers, staff that's a little bit more overseas and more affordable. And so it is possible to be much higher. Yeah. But indeed, we have clients especially the larger ones that are more 15-20%. And that's it's all about the hourly rate of the founder, and also just the dollar profit over the profit margin. That's ultimately what it's about.
Okay. You mentioned staff utilization and kind of that side of the ops that you look at. How should people kind of go about looking at staff utilization rates and looking at improving it once they've measured it?
Yes, that's something you can go very, very deep on, and it's a very nuanced and like tricky area to manage. As a starting point, I always like to try and just reduce it to almost like one client, because then you can see like, okay, if we have one client, who needs to work on that? Like, and then like start from there. It's like, okay, well, let's say we need an account manager who can handle 10 clients. We can now let's see for like, okay, there's one case where we then start to build it up for. So like, this one client requires 1/10 of this person's time. So then, okay, we can build it up to 10 clients. Okay, now we have 10 clients, one account manager. We know that's the ideal setup, for example. And then, you take a couple steps and like look at it from the whole agency. Where it's like, okay, well, based on the whole team we have, how many clients should we now be able to handle? And then we see how many are we actually handling. That's the simplest way to look at utilization, which is like, okay, well, if we have this many team members, we know how many clients we want them to cover, how many clients are they actually covering, is it very different or not? That's utilization, essentially. Just like if the account manager should handle 10 clients, but they're only handling 5 clients, that means you're at 50% utilization, which is not ideal. Now, there's a lot of different ways to look at it as well. You can look at it in terms of salaries, where it's like based on then like the hourly rate and the billable rate, where you can again see it like, are they covering enough revenue? But those are more like nuanced, and then you look at it like, okay, how do you deal with time off and everything? But yeah, essentially, like I like to just try and figure out like what are we aiming for, and then how far off that number are we.
One of the things that came to my mind as you were kind of going through that is scope creep, because ideally, an account manager can handle 10 clients. However, if we've got 5 clients and 3 of them are really painful, that could be 5 clients equals 10. Do you have any kind of recommendations about how to handle scope creep?
It is definitely a big issue, especially like we have that as well a lot for ourselves, where it's like, in finance, it's like it's hard to set a scope where it's like, oh, we don't do that. What I found is like, of course, it starts at the sales call, where you set the scope, you agree on the terms, and like that's where the expectation should be set to avoid the scope creep. Otherwise, it's like, we like to just monitor this for ourselves as well. Like, we kind of want to give a certain number of hours to a client. If we, every month we kind of track it. If we're far over that, then it's like, okay, well, we just need to have a conversation. Like maybe the client is not on the right like level of service, and then just try and be as transparent as possible. Like just like having that conversation with the client, like, hey, look, it's costing us a lot more resources. Like, if we want to keep working together, we might just have to kind of revisit how things are going now. But again, that all starts by actually having data, because I think the main issue that people have in terms of scope creep is that no one really knows that there is scope creep. Especially as the founder, you shouldn't know like how one account manager handles one client. Like that's like, you can't be that involved that that they hopped on that extra call this week, or that they did a lot more work. But if you at least have some sort of tracking, whether that's time tracking or again just a tracking of like, well, how many clients should this person cover, and like you just have this one number that you can look at, you can at least then have the conversation and then just try and handle it in the most professional way, whether that is an upsell or like a maybe it's just on the efficiency side, maybe it's at better expectations. But yeah, it's just having data is often the starting point to solve most issues.
Talking of data, who in the business should be kind of responsible for these numbers? And probably by that I mean, obviously you're working with someone. Who should that be to look at the model and stuff like that?
I would say that the owner of this data should be the finance team. Because again, as the founder, you should not be spending your time like, looking at formulas, making sure people actually submitted their data. I like to have, as the finance side, I think it's very important that they, can speak with the different departments to deliver their data. But again, it depends a little bit. Like, I think there should be different owners for different like numbers. Like if you want to track the operational data, your operations manager or head of service or whoever kind of sits above that, they should be responsible for that. But I do really believe like a lot of that responsibility flows up to finance, because as I said, they're the ones that should overlook the whole organization. And so they are the first one to see if data is not delivered or if it's not accurate. And then it's not necessarily like finance's responsibility to start tracking everything, but they should be the one to take ownership and like speak with the right people to make sure the data is there.
I think this might have been in Traction or the EOS book, where they said that you should split the P&L out into kind of every line item and assign someone to manage that line item. Do you agree with that?
That is quite an interesting one. I'm not familiar with it. I agree, I guess, in some way, where, yes, it does make sense to have like real clear KPIs. I'm not sure immediately how useful it is to necessarily relate it to the P&L every line, because like depends all how you split it. If you have software, like, maybe the operations manager should be responsible for software, but if this also impacts other departments, like if I, as the finance team, need to have some specific software, is now then still the operations manager? Is the operations manager responsible?
Yeah.
Overall, I try and always just like try and keep things simple, and just indeed we should just, finance looks at the P&L from like, hey, are we profitable? And like, oh, do we actually need? Like, I think it's especially when you do the bookkeeping, that's the perfect moment to raise questions where it's like, hey, I'm seeing some software going now that seems like quite high, or like I've never seen this before. Is this actually used? So it's like more like, the person who's actually touching these transactions, they should own it, in my opinion, where they should raise it, or like, if we're not hitting the budgets, the finance team should raise that. But ideally, you just have a culture where indeed everyone is focused on the bottom line. So like if the operations team knows that like, hey, we cancel this software, like raise it. Like, they should, be part of the team and help. But yeah, I think it's often better to keep things simple and like just focus on the bottom line. That's important, but don't make things too complex.
You've talked about kind of team there. On the finance side, how does that evolve in the life cycle of an agency? And I guess in that as well, when does your service become relevant?
Yeah, that's a great question. I would always say start with bookkeeping. Can honestly be done from day one. Might be a bit overkill. Definitely from like even 15K a month, it's just useful to have a bookkeeper. It's like, $300 a month usually, very easy, like affordable, and just it's good to just build that habit, especially if you want to grow, because it is quite messy to fix that down the line. So start with bookkeeping, and then with that, you should also just start speaking with an accountant to help with your tax returns and your filings. That's something, the sooner the better. Then ideally, you start looking at like, getting out of the other admin tasks that are related to finance first, which is sending invoices, making payments, making sure the team is paid, all of this stuff, which I know a lot of founders are doing themselves. It's just something where it's like, yes, it is only a couple minutes here and there, but there's no need as the founder to be sending these payments, chasing clients. It's just a headache you don't need. So like the second step is almost more like, you can call it a controller service, you can call it finance manager, you can call it just invoicing. It is something worth outsourcing that, can already from like more than 30K a month, when you do just have like, there's enough movement now in payments. That's worth just getting off your plate. And then really from 50K a month, that's often where now like the data you have is becoming a little bit too complex. Like just because you have bookkeeping doesn't mean you have a real understanding of the future. Like you have now quite a lot of team members, quite a lot of clients. Some clients pay late, some team members want a raise. How do you deal with all of that? So like from 50K a month onwards, it is often worth to like really start more looking at, again, that finance manager or this fractional CFO role, which can sound scary, a CFO, but it's more like, this forward-looking finance person to just help you with those decisions. But then from like 100K, 150K a month, that is where it's like the ROI becomes very clear, because now the decisions you make are just worth thousands or tens of thousands. So just having somebody there to kind of help you with it will pay for itself very quickly.
Okay. And then beyond that, maybe at the 8-figure level,
Yeah,
what should a finance team look like?
that's where you almost more changing the involvement of them, but not necessarily the roles.
Okay.
So it's like, as you go beyond like 10 million a year, that's when you just want to start getting like full-time in-house people. The work doesn't necessarily change too much. The complexity even changes, like it just increases, but it's not like a completely different business all of a sudden. It's just more that, like, you're now making decisions daily. You now have managers that are making decisions for you. And so that's where it's like, okay, it's actually more useful to have like a finance team that is there daily and that just helps you with all these decisions. The only thing that can really change is that now you might be speaking more with investors, with bankers. There's more opportunities. Maybe you want to start doing acquisitions. You want to buy other agencies. That is then it's good to have someone who is a lot more involved. But responsibility-wise, still these same roles will get you very far. It's just you need someone full-time and maybe need more experienced at like the real 8-figure level.
Okay. I want to go back to the kind of North Star point that we discussed at the start. So we kind of concluded that there was 3 goals. So, building for an exit, lifestyle business, or trying to maximize revenue growth. Is that the kind of 3 camps? Would you agree with those 3 camps, I guess? And if so, how does that then impact the different profile of business that you get?
I indeed feel like that's, especially the agencies I speak with, those are the ones that seem to come up most often. And like the different agency you kind of build is just on the lifestyle side. This is one where often you try and keep a little bit more of the profit for yourself. So you might have a focus on overseas team members. You're more likely to just keep working with contractors rather than actually bring people on the payroll. And you're just you don't want to over-invest in sales. And you just try and do your thing, do a good service, get referrals, just kind of keep the machine running without you constantly trying to push and refine things. And you actually just want to have something that just does a good job, and you can just do your thing and live the lifestyle.
Just playing devil's advocate on that, does that sometimes lead to kind of stagnation and death?
Oh, 100%. I definitely think so. But you don't it won't be a lifestyle if you really try and constantly stay ahead of the curve. Unless your lifestyle is if you really enjoy innovating, then that plays into it. But I think how some of our clients who are more on that lifestyle side, they are often more focused on putting a lot of money into their investments. They kind of just want to keep the cash flow high, keep reinvesting other things. They still do stuff. They don't just lie on the beach all day, but they are just not as worried about constantly pushing for new channels and new offers. So there is a risk of stagnation, but then if they are just pulling out 30K, 50K in profits every month, you can.
It's worth ways to live.
They might have to pivot at some point, but in the meantime, they live a great life.
Yeah. Okay. And then the other 2, what does that mean? So if you're building for an exit or you're trying to maximize revenue growth?
Yeah. So maybe to first touch on the exit one, that is almost it's sort of in between the lifestyle and the the high growth, because one, you almost don't want to go too hard if you're going for an exit. You don't want to take big risks. It's kind of
counterintuitive, though, no?
It's a little bit, but it's more you don't want to have a very risky business where you're constantly pushing, you're reinvesting everything, because from a buyer's perspective as well, if they just look at your P&L and it's just kind of all over the place, stuff is kind of breaking, you're pushing so hard that churn is high, your team is kind of stressed out, they don't know what's going on. That is not a very nice business to buy. So you kind of the the ones that we see, and we just helped a client with an exit, and he successfully exited in like within 90 days of start to finish. So that was like one
Very
of the
quick.
best. Yeah, it was a very nice process. But like his business was now very much at the point where just like he had that stability. He was kind of growing like a little bit every month. He was pretty much completely removed from the operations. Like there was a salesperson in place. There were a kind of consistent number of clients coming in. The team was very stable. They just very low like employee turnover. Like it was almost every month when the numbers came in, it was just margin stable, growth stable, profit stable. And then it's like as a buyer, that is like a much less risky business to buy. So if you're going for that exit, you want to just have something that's mature. You do want to focus on getting yourself completely removed from things. So that's where you might sacrifice a little bit of the profits and maybe even a bit of the growth, because like a closer might have a slightly lower close rate than you. A marketing team might be slightly less effective than you. But like if you are still the business, even in like if it's like only one small part of it, that will just really hurt your valuation and make it harder to sell. So if you're going for that exit, then you should really make this like, okay, like can someone just step in, take this over, and it just works? Or like if you're fully pushing ads and then like you step away, the ads break, the whole business crumbles, it's not a very sellable asset. So much more focus on just like, cool, getting good people in place to just run this machine. And then the high growth is indeed more just like, okay, we're just going to take the extra money we have and we're just going to keep pushing. Whether that's indeed hiring more aggressively, and we know that we kind of like overhire just so that we have that capacity and we don't have to slow down. It can be really like putting a lot more money into acquisition. It can be like, trying to get multiple channels to work. That might even be the solution. Or if you have a channel like ads where you actually can control the output, it might just be like over investing in there, accepting that your returns are going to go down, but as long as it's still like profitable, you can just accept a lower conversion rate. But yeah, it's like much more just like keep pushing, stretch the team, like hire aggressively, bring people in, constantly tweaking things. And like, yeah, we have some clients who have like, we had one early this year, like doubled in 1 month and like became like, went from 70K to 150K in pretty much 1 month. But then you are faced with the growing pains.
Yeah.
So it is a stressful existence, but if you really want to push, that is the way to do it.
What is the rationale behind the kind of focus on revenue growth? And is it, or in your view, should it just be for a short-term period and then you focus on kind of mopping up the back end and kind of lifting the profits back up and then maybe going again?
Again, it's indeed. I personally am not too like I don't run my business in the way of like the blitz scaling mentality. Someone who is like, wants to go really far and super fast, they can go through that for a longer period of time as long as the business doesn't crumble. What I have seen with the clients we had who went through very high growth periods, it was almost more a forced stop to the growth, wherein they like, if you're adding that many clients, it is just very, very hard to hire at a high enough pace. Like one client, they just had to put a stop to, like, they just had to put clients on the wait list, and they just couldn't onboard new clients because like they just couldn't hire fast enough. Another one who went, like he had a much higher churn rate after the growth period, and then all of a sudden, this is again where finance is so important, because if you just like, you keep just like, no, I'm just going to keep growing. Doesn't matter that my clients, like, of course we're going to leave some, I'm just going to keep growing. All of a sudden, you're going to find yourself out of money, because especially if you like, if there's a cost to bring these clients in, if now all of a sudden they're not returning you, like if the lifetime value of these clients is not like in balance anymore to the cost, you can go broke. Like that's when you go bust. So that is where it's like, okay, like as long as the fundamental numbers work, you can keep going, but it is is very hard if you go that fast to go for like that fast for a very long period.
Mm-hmm. Talking of growth, one of the other ways you can obviously grow is by raising prices.
Yeah.
Do you have any kind of tips around that?
Yeah, so this is an interesting kind of like the case study from a client who has been raising his prices very aggressively. And I mean, the simple way to do it is just to say a higher price. Because with him, he was kind of around the 2 to 3K a month retainers, and he just wanted to raise it because he just like everyone seemed to say yes on sales calls. And so at first we were trying to go super deep with him and just like, okay, yeah, like what it should be the ideal price. Again, like really looking back at like, cool, how much are we paying the staff? What profit margins do we want to hit? How should like what should be the right level? And then we were just like, you know what? Let's just start saying a higher number. And now he's like just consistently started saying a higher number. And he's now like the last client was just over 5K that
Just
said
doubled.
yes. Same offer, same service, just mentioned a higher price. And so that's where it's like my own beliefs do still get broken from time to time as well, where it's like, you don't necessarily need to make big tweaks. It might just be saying a high price. So as a starting point, again, just try and go for the simplest option. If the simplest option doesn't work, then like, okay, can we maybe reframe the offer? Can we add more value? Can we, make a community on the back end, like actually like add something to justify a high price? But for most agencies, they could just charge a high price.
Yeah. And is that for kind of new customers, or do you recommend kind of going to your existing customer base and, take this example, hey guys, I know it's $2,000 this month, but next month is 5K.
I have not seen that one work yet.
Yeah.
So that's indeed a much harder a much harder question. We had one case where they just kind of did go to the lowest paying clients, but that was more like after we really we dug in all the numbers, and it was just like they had a lot of clients, like over 50 clients, and it was just very clear that like this bottom section of clients who were just like legacy clients. And so in that case, yes, it was just like, hey, look, we need to be profitable. We've hired a lot. We're trying to do like a great job here, but we also need to pay our team, and we just can't justify these prices anymore. So if you have these legacy clients, it can work, but usually these are much harder conversations to have. That's why it's like if you have like a model in which there's some performance component in there, that's like quite nice because it's more in your control. Indeed, these price increases. So that's something that can always be considered, even like as like that could be the upsell, or just like, hey, we have been doing a really good job, but like indeed the price that we're on, it's just like hard for us to justify. I know we've been getting great results. Could we if we hit these targets, can we then maybe indeed share in the gains? So that's a better framing there. But indeed, otherwise, the reality is that most often it does seem to just be indeed focusing on charging the right price for new clients, and only if there's something really broke on the back end, then you go to them. Okay.
Can we play a hypothetical scenario here of what you just said of you're getting new clients in at 5K. You've got existing clients on, let's say, $1,000. Rather than kind of just keep growing and keep signing new people, and in this scenario, you can't go to this person and charge them 5K. It's just not possible.
Yes.
Would you say, sorry guys, we have to kind of for capacity reasons get rid of you to replace you with a new 5K person, or would you maybe keep them and train junior staff on that account, or what would you say to that?
Yes, I like this one a lot because this is a conversation we have a lot, and my answer is always the same for this one, and that is that if the opportunity cost is now actually if there's a real opportunity cost to keeping this client, then we should indeed potentially drop the client.
Okay.
However, as long as we're not losing money on this 1K client, even if it's just maybe we're only making $100 on that client, still means the team is getting paid for that client. Because if it's if we're not turning other clients away, might as well keep this client. And that is the reality for most agencies. It is quite rare for agencies to be at capacity. So it's like, unless you're actively turning away that 5K client, then you can just keep it. As long as you're not losing money on the delivery, you can just accept it. Like, hey, it's a legacy client. It's still good to have maybe like reputation, testimonials. But yeah, only if you're now like turning away clients and you're not able to hire new people for whatever reason, then it's just silly to keep the 1K client, because that slot could be filled by a 5K client. But in most cases, it's not, that's not necessarily the issue, because you would just hire another team member maybe and then take on that 5K client.
Okay. I read a stat the other day that apparently 10% of agency invoices go uncollected. I'm not sure if that's true, and I don't actually want to kind of go into that. What I do want to talk about is, do you have kind of any tips for collections for unpaid invoices for agencies?
Yes, it's a very interesting stat. I do, across our client base, I can tell you it's not the case.
Higher or lower?
Lower.
Okay.
Much lower. Pretty much 100%. Like, unless like you need some of course, like go bankrupt, but definitely not 10%. However, on your question, so we have this as part of our service as well now, where we can take, manage invoices. I would say like this is not an area that requires any like rocket science, or like this is not like any secret tactics to get paid. It's just work that needs to be done. So like, yeah, if you have collection issues, oftentimes this is with when you send them out manually yourself, like if you don't have a Stripe auto charge, if you're sending them out yourselves, it is so common to just delay it by a couple days. Or like we have clients who try and kind of time it, like, oh, the client wasn't super happy, so I'm going to delay the invoice. Like that just means you're causing issues there. So just like having a clear process, ideally not done by the founder, that just means every invoice goes out on time with the right amount, the right description, and just like making sure there's no errors in there, which will delay it. And then like after it's gone out, you need to have another process to follow up, make sure, again, you have an actual, human often in the loop to follow up. Maybe like the first 2 reminders can be automated. Then like you might actually want to have a human reach out and just be like, hey, what's like going on, and everything going okay? Like, we're really looking to get this paid. The term is coming up. So just like having a process that makes sure it comes in. And like, just having a good overview of like which clients are outstanding. Are these consistently paying late, or is this just a one-off? Like, you don't need to do anything crazy. You just need to have someone who does it. But it's like when it's the founder who does it, that's when you probably get those cases of like 10% of invoices stay unpaid because they're too busy to follow up. They find it awkward. It is awkward. And like they just kind of forget about it. And then you end up, working for free.
Okay. How do you have difficult conversations with clients that are consistently late?
It's, again, a tricky one. And here, again, it depends on how the client kind of wants to put his business forward. We have some clients who are super nice. They just they like, hey, you need more time. Like, they don't want to be taken advantage of, but like if they're actually in cash flow trouble, like it's like, okay, we can work with you. We'll help you scale through this, and we're a nice person. Others, they work with debt collectors, and then it's just like, if we're not paid on time, we will have to move this to the debt collector. Others have late payment fees. That can be like a way to kind of manage the conversation, where it's like in the contract, it's like, hey, we do have a late payment fee. I would hate to charge you that, but that's why we need to get paid. But yeah, luckily we don't have too many like bad conversations, because we work with clients who actually like don't scam people. So then it's like, hey, we deliver the service, we're a business, we have cost, we need to get paid.
And do you recommend after a period of time maybe stopping work if it's ongoing and you haven't been paid? Is that also part of the process?
Yes, more on the CFO side only. That's where it's like, we cannot keep working for free. We have cost. So then,
Okay. In terms of staffing then, do you reckon agencies have any form of incentive pay in their wage structure for staff?
One structure that I still personally like, and this is a little bit more like geared towards both the lifestyle or the high growth. Agencies might not necessarily be for the ones that really want an exit. is just to have the whole staff pay based on like a percentage of revenue, especially if you still have contractors. A lot of our clients just really like this method where like, maybe the team just gets like 10% of the retainers they work on. Works mostly for contractors, but this is a form of performance pay. Whereas like now it's like just so clear, if you work on more clients, if you work on bigger clients, especially if there's a performance component, if you can actually grow the account, you're going to get paid more. So like as a starting point, I always just discuss with the clients like, hey, is that something you like? Have you thought about that? Because if you have that structure, you avoid a lot of the more difficult conversations down the line of like people wanting to get a raise or bonuses. It's just a little bit easier. It's like, hey, you're just getting a percentage of the work you do. That's one structure I quite like. But then to your question, if you do just have more of a traditional setup where you just have proper like salaries that you pay, then I indeed still like to have some form of performance pay or bonuses in there. One structure that we've implemented with a couple clients is to have more of a bonus pool that gets built up. So, for one client, he just has at a pot level. So every pot, he wants them to hit at least a 60% gross profit. And so if they, take on more clients or they have bigger clients and they manage to be above 60%, anything above that goes into the bonus pool for that pot. And then at the end of every month, it just kind of gets distributed amongst the people in that pot. We have for another client, we just did, we helped them with like a bigger bonus payout. For them, it was also more based on like, okay, well, we had this extra money that was a lot more than, they were more profitable than they thought. So it's like, hey, that's the bonus that will be distributed amongst the team. And then it was more like spread amongst the team based on like the tenure, how long they've been at the company, based on their base salary, sort of like, as a manager received a higher share, but also the performance conversation that was had. Just the people who really outperformed, they got a larger part of the bonus structure. So those are like kind of the two like ones that I'm most comfortable with. For one, it's just based on the salary structure is the bonus essentially, and the other one is more like a pool where it's like if the company outperforms or the pot outperforms, then the team will benefit. But yeah, I think it is important to have some sort of reward for the team.
And just to clarify, that first one, are you saying 100% of the salary is performance essentially? Wow.
Yes, it is quite common. A lot of our clients have that. What I do usually see is there is some sort of a minimum floor in there, because otherwise it can be very hard to attract people. But like this floor is almost never hit. This is only like if they all of a sudden like, maybe in the first month when they don't cover many clients, that's when it kind of hits the floor. But yeah, no, it's quite common, especially with these agencies with freelancers.
Okay. And in your kind of business thought process as an agency owner, do you like that, or would you prefer to have kind of a base and some kind of performance element?
In our company, I also have that same structure where my team, they get a percentage of the clients they work on. So yes, I like it.
Okay, interesting. And sticking with the kind of talent point then, going back to what we said at the start, you've obviously worked across a lot of agencies and you see what they're doing well. What are the agencies that are really good at hiring and retaining top talent? What are they doing versus those that aren't so good?
One big difference I see across our clients is the ones that have a stronger personal brand.
Okay.
That it seems to have like an actual tangible impact on the hiring. We even see it ourselves. Like we hired a great analyst a couple months back. He just saw our content. We've at the same time we've been putting quite a lot of money into job ads. Even tried different methods of like outreaching to people. But then like the best people just came from content, and they just saw us and they wanted to be a part of the company. So that's one I definitely see. The ones with a real social presence have a much easier time hiring good people. Another side that I see with some clients are the ones that actually like treated it like a full-on sales funnel almost. We have one client, he broke it down for me the other day. He has like this AI tool. I forgot the name, but like it helps you sort of like it's almost scrapes LinkedIn based on your requirements to like find people and rank them based on your criteria. And then it's just a whole sequence of like, just how you would do it for the sales side, connection request, message. They're funneled to a landing page where like it's almost like literally to sell the company, but then like for hires, where it's like even has like a VSL almost, or like a video talking about the company, has testimonials from the employees, this a clear job description, and like that's an actual funnel to bring people in. If you want to like take that one step further, we have some clients who even have like then like almost automated assessments where it's like if they apply, there's like are invited to an assessment. They have to fill it out. Only if they score above a certain mark, only then does it come to kind of the hiring team or the founder if they're still doing it. So that's like really the two tips I guess I can give from the clients we see, where it's like one, be a person in a company that people want to work for, and two, don't underestimate the effort that's required. Whereas like, getting good people is, can look the exact same way as getting good clients.
Okay. And then on the retention side, do you have any tips for keeping quality talent?
It's almost, related to how you bring them in. So it's like if you don't overpromise them, if you have their own performance pay or like a percentage pay, you're not going to retain them if you can't give them the number of clients they promise. Because like it's still compensation, especially like that's more the conversations I'm having. So like yes, there's probably a lot on like more the leadership side. I'm not too involved with that for our clients, so I don't want to comment too much on it. But like from a compensation side, it's more just like being a little bit more transparent with them, actually seeing what do they want to get to. That's a conversation I know not many founders actually have with their client, like with their team members. Like do they want to? Are they happy with 5K? Are they happy, like, do they need to get 10K? Do they need to make 15K a month? And then just being realistic with them of like how they can get there. And if they can see your agency as, the best vehicle for them to get to their goals, then you retain them.
Okay. So aligned kind of incentives.
Yeah. Okay. Just like as long as you can help them get their goals, they shouldn't really leave.
Okay. I want to talk now about kind of these agencies, how they're reducing churn and keeping clients happy.
Yeah.
What do you see the top agencies doing in that kind of space?
Yeah. So this is also a very fun conversation I always like to have with our clients. Of course, it all starts with results. If you get results, you are much more likely to keep your clients. So I won't really go into that side, but like if you're not getting results, there's not many other things you can do to consistently retain them. But assuming you're getting at least like results that are in line with what you promised, then what I found that is a real like significant driver of higher retention rates is really to keep that personal touch. Mm-hmm. So one great book on this as well is like Unreasonable Hospitality. This is really about like the hospitality space. So like how top restaurants, how they deliver their service. So like one point from there is like if you go to a fancy restaurant, you go to the Ritz, they will remember your name. If you come back, they'll actually remember what you ate before. They really like know these things. If you bring that same level of care to your agency, it will just have such a like actual like significant impact. And this is what we try and do. So we have very high retention. We don't really churn any clients, and like not to say that we're so much better than anyone else, but like it's really for me a priority to be friends with my clients. I'm asking them about their personal lives. If I'm in the same city, I'm actually going to meet them. We're going out for dinner. We play sports together. We try and meet up. I know about their family. I know their goals. Like there's a lot of things. Even if you just have account managers working on the clients, there's still a lot more that they can be doing that just doesn't cost more money, doesn't cost more time, but actually will be a significant driver of retention. Like if your account managers do remember their birthday, if they do, we send welcome gifts to new clients. If they do all these little things, it becomes much harder to like churn. because I think this was Homosi who said this. It's like, it's very easy to stop a subscription. It's very hard to stop a relationship.
Yeah.
And so as long as you're getting results, then if you're also like an actual person they like to speak with and they value in their lives, you can have a very high retention.
Okay. Obviously, if you're doing a great job and you're delivering great results as well as building this relationship, you can kind of charge more. You also mentioned previously that the top agencies that you're working with are kind of performance focused in terms of pricing. Can you just talk to pricing structure and what you recommend in an ideal world for agencies?
Yes, and so I almost would say like this is only for certain types of agencies where we see that work. So like we have some of these performance based, and they're the ones that maybe are more profitable because they can charge really high if performance is high. So they need percentage of ad spend or percentage of like revenue generated or kind of profit generated on the ads works quite well. But it's again because a lot of e-com brands, they are used to it and they like that structure where sort of incentives are aligned. But ultimately, when I think about pricing and about the optimal pricing structure, it is more the price that will just maximize the lifetime value to client acquisition cost. That is really what is most important for me. Because as I also said, like we have some clients who work like with Upwork clients. Their prices are much, much lower than the clients who work with like performance based deals. However, their cost to get a client is like $250.
Yeah.
So it's like, well, that relationship is still very strong. If this guy is gonna like try and double his prices, it's like it won't work. Like because that's just not the nature of his model and his space. Whereas like and his everything for his agency is aligned to maximize the revenue and the cost in that model. So I wouldn't necessarily say there's one model that's better than the other.
Yeah.
The only thing I will say on that is that a big mistake I do see is when people don't understand the model they're in. So they might indeed if they say they want to get these big performance-based deals, but they're not doing everything in the past. Like they're still trying to be kind of like cheap and keep a lot of the profit. It's not gonna work. Like if you do want to really charge these higher prices, you actually need to go above and beyond.
Yeah.
And so just making sure you really understand your model, that is more important to me than the type of pricing structure they use.
It's part of that thought process of kind of calculating LTV to CAC and seeing, maybe you could charge more initially, but those clients are going to leave quicker. So maybe it's better to charge less and have a longer lifetime.
Exactly.
Okay. Interesting. Any other tips on kind of pricing that you would give people?
I would say just indeed test, get the data, go deeper on the numbers. Price is again like even if you're quite a niche agency, there's still probably different like buckets that your clients fall into. Maybe you work with some larger, some smaller clients. Like actually see like, hey, do we need to have a different tier for these ones? Or like if you're working with different industries, do you actually see a big trend in that? Like we just went through that exercise with one of our clients who just work with a lot of different industries, and they actually found like there were certain industries that seem to just perform much better than others. And so it's like, well, shouldn't we just shift more focus to this, actually put a branding towards this because it just works for us. And so that's where it's like, it's not just charging a price for a client, it's actually understanding who do we really work with, even at which points do they drop off, is in the first month, the first 6 months, first 12 months, like really understanding the nuances of each client. That's most likely the best place to start.
And do you have any thoughts or tips around maximizing value? And I guess here I mean kind of the lifetime value, and is that focused on an intro offer at the start, getting people onto recurring, and then some kind of upsell? What do you see kind of working well there?
Yeah, so the intro offer is not the best if you really want to maximize lifetime value, because indeed only a smaller part will stay. And so if you look at like the lifetime value of the company, that will be lower because most of them will drop off after the first month. Of course, the best lifetime value are the ones that can charge a lot more to their clients. But yeah, ultimately it's just like, reducing churn, charging more. Those are the the drivers of your lifetime value. So whatever you need to do in your agency to charge more or reduce churn, that's what you need to focus on.
Okay. A lot of what you hear in kind of the agency spaces, and we've talked about this today, free up your time as the founder and kind of, get out of doing XYZ job. What should the founder spend their time focused on?
What I had a mentor of mine tell me is that you as a founder should spend the majority of your time thinking. And so that is whether that's journaling, whether that's, researching, whether that's just like trying to think of more innovative ways to do business. That's what a founder should really be doing. You mentioned the book Traction as well. I know they have a very nice accountability chart, which I also use myself, and there you can really see that founder sitting at the top, often as the visionary role, who should just indeed make sure that the direction is clear for the team, that everyone knows what they're going after. And then from my side, on the finance side, kind of how I work with the founder is just indeed I'm telling them what the issues are to enable them to think about the right things. So it's as a founder, if they hear hey, churn is becoming an issue, it's still the founder's job to spend a week thinking about what do we do to fix churn. It's not going to be the founder who's now going to jump on calls with everyone. It's not the founder who's going to email everyone about late payments, but as a founder who should think of the structural solution, put the right people in the right place to be the founder. And so it's the founder needs to get the data, be enabled by the different people underneath him, and then actually think about structural solutions.
Okay, so kind of learn, think, strategize.
Yeah. Think about scalable solutions rather than jumping in.
Okay, makes sense. I want to round off the podcast by talking about AI.
Let's do it.
It is the trend at the minute, so I feel like we kind of have to. How are you using AI in your kind of professional life at the minute?
The way that I'm using it is still quite limited, I have to say. So we did have a custom GPT, which is trained on all of the call transcripts that I have. It's trained on a lot of the data that we have. And so that is something that's been very valuable for me and my team, where we can chat with a chatbot that actually has
AI
the right context. Yeah. So that has been very useful. I have tried, we have worked with some partners to try and build more custom AI tools, and AI will come for the finance space. But right now, I don't think it's there yet. Mm-hmm. And, you're not going to have AI doing accurate bookkeeping yet, even though it seems so simple. Bookkeeping is actually not. And you're not going to have them send your invoices yet. You can't rely on them yet for accurate analysis. It would be ideal if the AI knows everything about your business and you can just ask it, what's my lifetime value? What's my acquisition cost? It's not there yet. And so I'm mostly using it to learn, to answer questions quicker, to train the team. And I'm keeping an eye on the space, but I'm not going too deep yet.
Okay. And are you seeing any agencies that you think are using it well?
What I see AI really do at the moment is make money move faster. So I do see in it stuff that used to take quite a long time, building a landing page, building websites, getting copy ready. All of that now happens at a much faster rate. Mm-hmm. So doesn't mean it's a completely transition and something they have now something that's completely new that's happening. It's just things that are being done so much faster. And so amongst our clients, the best use case of AIs that I see are just the use cases that take something that used to, be a one-day job to now a 10-minute job. And so if you can quickly turn things around, that's where I see the real power now.
Okay. Joey, thank you so much for coming on the podcast. I've learned a lot, and I'm sure everyone that is listening has too.
Well, glad to hear that. It was a pleasure.
Cool. Where can people find out more about you, and what kind of businesses do you work with?
Yeah, so best place to find me is on X or LinkedIn. If you just search for my name or Agent CFO, you will find me, or email me at joey@agentcfo.com. And as we've talked about, my niche and my specialty are agencies, pretty much at any level, we can at least have a conversation. We are just here to enable the founders and take the finances off their plate, whether that's a very small bookkeeping or accounting start, or if they're already interested in like really getting more the more like CFO level support. But it's always worth a conversation.
Sounds good. Joey, thank you again for coming on.
All right, it's been a pleasure.
Scaling an e-com brand is hard. That's why we're on a mission to share as much info as we can to help make it easy. From weekly interviews with the biggest names in the space, to case studies, brand breakdowns, and tips and tricks, and much, much more. Subscribe so you don't miss out.